All right. Good morning, everybody. Good morning. Good morning. Welcome to Tuesday morning, 8:59 a.m. on this beautiful 67-degree cloudy day. Hope you guys are doing well. Hope everybody's happy this morning. Can you hear me all right? Are we good? Everybody can see my screen? Yeah, awesome. You guys will be happy to know that I fixed all the slideshow stuff. Hey, good morning, Miss Adriana. How are you today? Making me blush over here. Guys, it's great to see you today. I'm excited. Gonna be a good day. Um, Welcome, newer folks. It's wonderful to have you guys that are brand new in here. You guys that are coming back to kind of reinforce rules. I just want to give you a little rundown on what we're doing in class, guys. As we are, oh, look at that, 9 a.m. news, pushing it up. Um, we are going to talk about patterns. We're going to talk about advantages. We're going to talk about rules. I'm going to give you everything that you need to be successful with this software to turn you into a chart reader. And in exchange for that, man, I got out of my crude oil long way too soon. Um, in exchange for that, you guys are going to post pictures for me and you're going to tell me what you're doing and you're going to give me the honor of giving you feedback on everything that you do. And that's kind of how the class works. The first hour is going to be a little bit of a lecture. The first hour is going to be talking heavily about the rules for what we call a high probability trend trade. It's a trade that typically wins 70 to 80% of the time. It's a trade that has been known to create confidence through the memory of success. And it's a trade that really only has three rules, guys. And the three rules come about on only two charts. I'm going to show you up here. So we're going to talk about this a lot. We're going to talk about momentum, a clear path, and entry. And we're going to do it on only two charts. We're going to keep it very, very simple this morning. We're going to talk about a large chart defining direction, momentum, and areas. We're going to talk about a small chart refining what the large chart tells us to find an entry. And the reason that I did that first, and I don't usually do that first, is because we're going to take pictures this morning. But first, we're going to look at news, guys. We just had some 9 a.m. news. The S&P composite, it's a medium impact, may create a little bit of a bump and a jump in the market. If you were watching one of the markets, it may have just spiked. Crude oil spiked up. It was beautiful. And then at 10 a.m., we have cheeseburger consumer confidence. No, it's not really cheeseburger consumer confidence, but that's the running joke in the room. It's actually the conference board. Sounds way more intimidating than cheeseburger, but all we need to know is that there's a red box next to that release, which means that it may create a giant emotional response in the people that control the market. Just quick little news flash for those of you that didn't realize it yet. You are not the people that move the market. You are a guppy at best in a giant ocean of sharks. So the trades that we teach, that I teach, I suppose it's just me here, revolve around allowing you to be a guppy, allowing you to be a remora and let the sharks do their thing. So before we do anything today, I put a little note in the room and I was really hoping that you guys would open up your TechSmith capture, guys. TechSmith capture is how you're going to take pictures of everything, how you're going to give them to me so we can have a conversation. TechSmith capture is your key to having a personal session every time you want a personal session with me. Good morning, JW. And I'm going to give you the link. I'm going to give you the how-to, but I'm also going to show you the how-to. Because I think this really is the most important part about what we do is the feedback that you can get live in the room every time you do something, every time you see something. So because we use two charts, I always want you guys taking pictures of two charts. So we're going to do that with Capture software. Once you bring it up, and I also put the link in the room, if you can't find it, if you need to download it, you guys that are new, I hope you have it. I'm going to click Capture. And once I click capture, if I hover over one screen, it's only going to give me one screen's worth of information. If I hover, well, that's really it. It's just going to let me hover over one screen. I don't know if you guys can see it dancing. So we're going to use it as a click and drag tool. I'm going to go to the upper left-hand corner of my large chart, the chart that leads the way, that defines direction, momentum, and areas. I'm going to left click and I'm going to hold that mouse button down all the way down to the bottom right. And guys, I want you to notice how my charts are spread out. They're readable. And when I take this picture, I'm going to make sure that I get all of the price axis in there, as well as the timestamp, because we're going to talk about both charts. We're going to talk about advantages and entries. So once I release that mouse, it's going to give me some options. It's going to say, hey, check it out. I'm going to see if I can make that a little smaller. Maybe I can make this my default. We'll see what happens. Nope, that's not what I needed. We're going to do it again. I'm going to take the picture. I always wondered what that did. Click, release, and I'm going to hit that capture an image. And once I do that, it's going to give me the image that I captured. So I'm going to be able to talk about what it is that I see. A couple things that I want to be able to see on your charts, guys. I want to be able to see the timestamps, and I really want to be able to see these price bars, because what you're going to do is you're going to say, hey, Mark, I went long right here at 83, and I'm going to line it up with what's going on over here at 83. And that's just click and drag on the boxes. If I left click and pull down, I can do a box any size I want. You can also give me arrows where you say, hey, Mark, this is the best momentum I've ever seen in my life. Hey, Mark, this is an area where I might take profits. So you're giving me as much information as you can about what you see on the chart, because we're just becoming chart readers today. And then the most important thing you can do is tell me why. Click and drag, create a box. If you are like me and you have some tired old eyes, you can make it bigger. But tell me why, right? What did the large chart say to you? What are your reasons for taking that trade? Show me where you entered. Show me where you got out. If you are working on management, show me stop placement, where you were trying to protect your profits. But what happens is every time you fill out this chart, every time you circle your entries, your exits, every time you tell me why you did what you did, all you're doing is you're saying, hey, Mark, I want you to look at my chart read. I want you to tell me if I'm reading it correctly. Was there a better entry? Was there a better exit? Was there a lower risk entry? Did I have the advantages that I needed to really get into this trade? And we're going to do this every day, guys. That's what the second and third hour are, is me looking at your charts, and we just have this great conversation about it. So I'm going to click copy down here in the bottom right. And when I click copy, it's going to very loudly put that onto my clipboard. And if you're in the pop-out version, you need to hit Control V. Control V will paste that picture right in the room. And then what happens is, as we get into the second hour, after we talk about all the advantages, we're going to look at your chart. We're going to talk about it. I'm going to give you feedback, and I'm also going to give you a plan of attack for maybe doing it better. Maybe I'll say to you, hey, I love your entry, but I want you to notice all the trouble above you. This creates a management opportunity for you. Not a bad spot to take first profits, because we're not sure if it's going to hold or break. And then what you can do after you drop it in the room is click this upload button. And this upload is going to give you a link to what we call screencast. And this is really just putting your picture in the cloud. And then from that link, when you took the trade, I want you to bring it over here to your spreadsheet. Your spreadsheet was provided by Nexgen. It's in your Nexgen Study Picks folder. But just in case you're not the searching type, here's mine. You can steal it. It's got some good stuff in it. But this link is your trade journal. So right now it says app.screencast.com, blah, 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 blah. What we want to do is go to the Insert tab, and I want you to go to the link button. And we're going to turn all this writing into just a pretty simple word. And we'll just call it, I don't know, we'll call it long trade. Maybe it's a loser. And you click enter. And then from the first tab here, you're going to have that link. You're going to be able to talk about how you felt, what your advantages were. And then this right here, this is feedback from class, guys, is when you post in the room, we're going to have this great conversation. So Grant, you're going to say, hey, Mark, here's the long trade that I took. And I'm going to say, Grant, I want you to recognize these 3 advantages that are on your chart. You took the best entry ever, and I think your management was out of sight. Let's see if we can keep doing this every time. And if that picture, hey, good morning, Miss Cindy. I love your enthusiasm, you and Adriana. If that picture represents a rules-based trade, if it gives you a statistical advantage, well, then you're going to drop it into your favorite looks as well, because this is where you guys are going to build a trading plan. So being able to capture picture, guys, I think is the most important thing that you can do. Taking the time to annotate your charts is the second most important thing that you can do. It's so great for you because you're going to get feedback on everything that you do. You're creating recognition through repetition, and it really just sets you up. So I'm going to get into my slideshow. If you have a question, if you need me to take a second and not move forward, give you some clarity, it's okay. Just say the word. I got you, 100%. I don't mind stopping the class for any questions that you have. I don't really have a syllabus. I don't have a schedule. We can take 3 hours on momentum if that's what it takes to get you where you need to be. So, guys, really embrace the idea. Be active in your own education, and let's get going. We're going to talk about a couple different things first. Most of all, we're going to talk about what you're going to get from Nexgen, guys, what you're going to get from the software. And it's going to be chart reading. Most important gift that I can ever give to you guys, because chart reading is about 90% of every day. Chart reading is what allows you to look at these indicators and understand what they're telling you. And when you are a chart reader, you're going to understand where the market is likely to continue. And that point is going to be your point of entry for the high probability trend trade. You're going to understand where the market is likely to go. And this is going to allow you to build an outstanding management plan that revolves around using these indicators to get you the most out of every trade. And then you're also going to understand where the market is likely to stop. We call these likely to stop areas termination conditions. And a termination condition can stop the market cold. This is where the people that are in charge, once again, not you, where the people in charge are making decisions, where buyers buy and sellers sell. This is where profits are taken and positions are entered, guys, and you're going to be able to identify them and make sure that you don't get caught in the fight that's going to happen between the people that are in control. Once you're able to read your charts, once you understand the three simple advantages of a high probability trend trade, trade entry precision is really what we talk about. We start off with a trend trade, but your ability to read charts is going to take you into really, let's go laser pointer. It's going to take you to any trade that you want. You're going to be able to take advantage of all sorts of moves in the market. And then we'll also talk about trade management. So as you develop a management plan, I want you to share with me. I want you to tell me why you're doing what you're doing. And you and I will spend every day that you need it working on getting you the most out of every trade, reading the advantages and getting you where you want to be. So we're going to do this. It's not letting me click. Here we go. And we're going to do it pretty simple, guys. My first hour is learning the trigger line and Fibonacci rules for when it's okay to trade. You like that? Pew, pew. Good morning, Dwight. You'll find that this class gets silly sometimes too, because we don't always have to be serious. But we're going to take an hour, maybe 45 minutes, and we're going to learn the trigger line and Fibonacci rules for when it's okay to trade, guys. I'm going to have you speaking to yourself in terms of advantages every time you think it's time to take a trade. You're going to understand what it takes to get in. Hey, good morning, Miss Jen. Welcome all the way from London. So it's what? You're about 2 in the afternoon over there? 3 in the afternoon? I've got a friend in Zurich, and I think he's 2:13. Okay, awesome. That's not bad. You get to sleep in. So Jen, welcome, and please be very vocal. If you need any help at all, be very vocal. If you have any questions, be very vocal. I love answering questions. I love talking with you guys, especially when you're in some place like London, because I'm here in Texas, and I don't know, it's kind of neat. One day I'll go. We're going to learn rules. You guys are going to simulate. That's the cool thing about NinjaTrader is you guys, hey, and we've got one from Dubai as well. I love this. Good morning and welcome, or good evening in Dubai for sure. Guys, this is pretty cool. You're going to find that we have people all over the world taking advantage of Nexgen. I've got trading people. You're in Colombia, Adriana? Did you? Oh, this week. I was like, wait a minute. You're Miami girl. And I'm in the United State of Texas. You have an office there? All right. I guess that's okay. You can have an office in Colombia. Good morning, Roku. Guys, I love it. You're going to find that this is very much a community. And you're going to find that you guys are going to feed off of each other, both positive and negative. So make sure that it's positive. And I want you guys simulating all day long. I want you practicing these trades. And more than anything, I want you making mistakes. So Jen, make mistakes, right? But take pictures, post them in the room. Let's talk about them. I am the epitome of Southern charm. I'm going to be so nice to you. We're going to celebrate victories, right? And then we're just going to kind of curb behavior to get you where you want to be. But once you guys trading when you have the correct rules, because that's where the advantages come from. The advantages happen when the rules are met. So I want you focused on that, because when you start winning and the rules are wrong, you'll find that you'll get real lucky on simulator. And then once you go live, bad things tend to happen. We're going to simplify a lot this morning, guys. We're going to keep it really focused on that high probability trend trade, but I'm going to give you a second trade as well that allows you to catch even more. But you have to know what looks you'll commit to. And guys, that's where we went into the spreadsheet. Every time you take a picture, this is what you're going to look to. So it's important that you're taking pictures, that you're filling the spreadsheet. You're also going to be able, you just funded 2 out of 3 of your Apex accounts. Congratulations, Lyle. Killing it. That recognition is also going to come, guys, from all the pictures that I've given you in the spreadsheet. This is just Nexgen users using the software, taking advantage, finding beautiful trades. The idea is that you've got to know what it looks like when the market is still, and it makes it easier to catch it when the market is moving. And I think anybody with any experience in this room will tell you, in the beginning, the market feels like it is absolutely flying. But the more you look at the pictures, the more you annotate, the more you recognize the looks, the easier it becomes. I promise you that. Remember that the step-by-step path, everything starts with you posting in the room. I like to think that I've never yelled at anybody or belittled anybody. And I don't think that I've ever tried to make you feel bad about a mistake. So I want you to post in the room, and I want you to share those mistakes, guys. This is a very safe place. Nobody knows what you look like. Jen, I am not going to bump into you by, I don't know what's in London, by some London-y place and go, oh my gosh, it's Jen that took the horrible short trade, right? I'm not going to fly to Colombia, knock on Adriana's office door and go, Adriana, seriously, what were you thinking? You know you traded in termination conditions, right? Because we're just here to get better. So we're going to simplify. You're going to get the looks, guys. Post in the room. Use that spreadsheet. And when I talk about the spreadsheet, this is your trade journal. So everything that I do today, I'm going to look at tomorrow, right? And I'm going to try to recognize the things that are bringing me success. The things that are bringing me success work their way into my own personal trade plan. And then I'm going to get that recognition through looking at all of these things on the third tab, right? This is where I did the work for you guys. I've got entries, I've got management, I've got patterns that repeat themselves, termination conditions. You NASDAQ traders, I know there's a lot of you that get real excited about wanting to trade the NASDAQ. A lot of my thoughts on the NASDAQ here. And just it's repetition, right? It's recognition through repetition. So use the spreadsheet. One thing that I meant to point out is your page, Jen and Grant and all you guys. I want your section, the second tab, to look like mine at the end of 30 days. And what you're going to find is that everything slows down for you. Everything will slow down if you just start looking for the looks. Making sure that you post in, tell me why you're doing what you're doing. And then let's talk about a high probability trend trade. This is my favorite trade in the world. This is a trade that typically wins 70 to 80% of the time if you follow the rules, right? So I'm going to have people that are going to think they're taking a high probability trend trade, and then they're going to lose 70% of them, and they're going to be like, man, Mark is full of beans. This thing doesn't win. 70 to 80% of the time. And that's kind of where this other picture comes in. If you're never showing it to me, telling me what you're doing, well, maybe this was your short trade, but it broke a rule. So I'm only here to tell you what you're doing right and wrong so that you can avoid the wrong a little bit. So what we're going to do is we're going to take 3 rules. Each rule provides you an advantage. The first rule is going to give you the advantage of momentum. The second rule will give you a clear path, which really means nothing between you and your profit target. And then the third rule is going to define your entry, the best of the best spot to get into the market. All of this is going to happen on only 2 charts. And I love that you can do this on 2 charts, that you don't need more information to be a better trader. You need better information. You need to be a chart reader. Your large chart is the workhorse, guys. Your large chart is going to define the direction of the market. The large chart is going to define the momentum in the market. The large chart is going to define the areas that you're trading to, trading from, that you shouldn't be trading into. And all of this is done on the most current bar. It's a very broad stroke of a brush. This one bar is going to define direction, momentum, and whether or not you've reached an area that's problematic. Shows the overall opinion of the market. And what it really does is it shows you what the large crowd wants, what the people that push the market want, guys, because the large crowd's going to define the direction, right? The people that are putting the most money into the market are going to make it move the direction they want. They're also going to establish momentum, your first advantage, and these are the people that are reacting to those areas. Well, your small chart is a reflection of the small crowd, the people that love to fight all the good things in life. And they're going to give you this little shove. We're going to dissect that one bar on the large chart to 15 to 30 buys on a smaller, faster chart. And that's going to get you into the market at the best of the best spot for continuation. That's going to allow you to reduce your risk. It's also going to give you the opportunity to really increase your profit potential. So only 2 charts, guys. And everything starts with rule number 1. And rule number 1, let me go back again, says that your large chart needs strong trigger lines. So we're going to define strong trigger lines. And I'm going to tell you right now, large chart also defines direction. And you can't have strong trigger lines if you're not trading with the direction. So it's literally impossible to have rule number 1 met if you're fighting the trend. If the background on your large chart is green, the market's going up. You should only be looking for rules to be met for high probability trend trades long. This pretty much removes your opinion, and it allows you to be with what's happening. If the background is red, the market's going down. You're only looking for rules to be met for high probability trend trade short. This is an awesome advantage to get things going, and it's not even a rule, to be honest with you. It's just trading with the direction, and it's going to pull an awful lot of mistakes out of the mix. Rule number 1 says that we must have strong trigger lines. Strong trigger lines mean in an uptrend, both the small and the large triggers must be green as well. We're going to let all the colors match because when the colors match, we have the potential for strength. Rule number 1 is separation between the small and the large. The small are a faster moving average, the large are a slower moving average. And when I get separation between the two, like scissors that are opening, preparing to cut, guys, this is strong trigger lines defined. In a downtrend, all the trigger lines have to be red, both small and large. They should be wide and angled in the direction of the trend. And it's the separation between the small and large that lets me know that the odds are favorable for the market to continue down. We're going to call this strong trigger look odds favorable momentum. You're going to see it annotated on charts, OFM. In odds favorable momentum, when I have strong triggers up, I'm going to buy a pullback to Fibonacci support on that smaller, faster chart. Really, every trade that Nexgen teaches is a momentum-based trade. So foregoing momentum tends to be very disadvantageous. Let's see how many big words I can use in one breath. On your large chart, it looks like a tail. Remember, it's a slow-moving chart. You're going to be able to pinpoint on the small chart where that tail is most likely to form. Strong triggers, buy a pullback to Fibonacci support on a smaller, faster chart. Strong triggers down, sell a pullback to Fibonacci resistance on a smaller, faster chart. And guys, this is your best of the best look. This is what sets you up for success. And strong triggers has a life cycle. Strong triggers, When I have the separation, when the scissors are open, good morning, Kev. This is odds favorable momentum. This is the best of the best look for short trades. This is when the advantage is the highest. This is the look that has to be present to take that trade that typically wins 70 to 80% of the time. And then with both triggers down and one line goes inside of the large triggers, but one line stays out, right? Kind of teetering on the brink. This is the first sign that momentum is slowing. You can visually see it on a large chart. You can still go short if the other charts agree, but it's no longer a high probability trend trade. And then when the smalls work their way inside, both triggers are down, both of the small triggers are inside of the large triggers, you have a weakening or a slowing of the trend. Anything can happen is the term that you're going to hear in class. Short trades can be taken, but they must be managed well. And then when you get these weakened triggers at these key Fibonacci areas, what you're going to find is the market is more likely to bounce or reverse. So I am going to end my slideshow real quick, and I'm just going to open up crude oil. And I want you to kind of see the life cycle here. And I'm not only just going to open it up, I'm going to take all this noise off of the chart, guys. I'm going to get rid of the T3 Fibs Pro Trader. I'm going to get rid of divergence. I'm even going to get rid of all the fibs. And I'm going to leave nothing but triggers on this chart. And what this is going to do for you guys is I'm going to do two things. We're going to talk about momentum and the shoves that they create. You're going to be able to visually see when I have strong triggers, sell a pullback, and you'll notice that the market continues. When I have strong triggers, sell a pullback, you can see that the market continues. And guys, what we're going to do here is we're going to develop a little bit of trust in momentum. We're going to develop a little bit of trust in the idea that selling or buying a pullback with strong triggers is the best of the best course. And you're going to see that it doesn't happen all day long, right? Sometimes that market just grinds up for eternity, and it takes a little bit. Sometimes your colors don't agree. Sometimes it takes an hour, sometimes it takes 2 hours. But if you go back and you circle these tails, when rule number 1 is met, here's that one trigger line out, one trigger line in, there's a tail. That's the very tail end of momentum. We'll circle that tail as well. And what you'll find is that we'll be able to go back on a smaller, faster chart and determine whether or not the rules were met, because we needed to buy support when momentum is in place, and we're going to key it all together. So is everybody good with the idea of momentum? That when the trigger lines are separated, when the space is present, guys, this is the best look. This is the one that makes me giddy. You'll see people posting pictures in this room all day long, and you're going to see that there's more winners with momentum than there are without. And I want you to just learn to trust it. I want you to learn to trust the idea that strong triggers sets the tone. Arturo, heck yeah. Oops, let me click on your link so it's not so fuzzy. This is your test. Love everything about it. You gave me both charts. I have timestamps. I also have your entry, and I have your exits. And Arturo, just from the small amount of time that you've been with me in here, can you tell me what the challenge was on that long trade? And I know that you were just getting in and out, but that was a little test. We're about to talk about it, guys. We're about to talk about termination conditions, areas that may stop the market. Look how the market bounced right off this blue fib, right off of this blue fib. Look how the market hit that red fib and then started down. We're going to talk about that right now, because what that is the ability for you to not trade into a termination condition. This is rule number 2. Rule number 1 has already provided us advantage of momentum, guys. Those strong trigger lines have got to be in effect, but that's really not enough. It's enough to break areas sometimes. Strong trigger lines are likely to push the market. Strong trigger lines can even cover some mistakes, but we really want room to the target. We really want to make sure that we have a clear path, because the whole goal is to make money, right? So once again, I'm going to remind you guys that we're going to define these areas that could be problematic on the large chart. The large chart has already said green, which means we're going up. The large chart has already given me that scissors open, odds favorable momentum. And now I want to make sure that I'm not trading into an area that can stop the market. That's a termination condition. It's a Fibonacci-based indicator that may reverse the market. Notice that may is a different color and underlined. Areas break all the time, guys, and they typically break with really strong triggers. But they may reverse the market based on a comparison of the Fibonacci area and those same trigger lines that gave you momentum, those T3 trigger, strength and location. The areas that we're going to look for are going to be Fibonacci support, blue lines, red Fibonacci resistance, yellow 1-to-1s, a cyan divergence low, a magenta divergence high. Guys, divergence, for those of you that are brand new, it means that there was a loss of momentum. That's all it means. If you see one of these lines, it means that the opposing force stole the momentum. And I'll show you a couple pictures. We're going to learn to read those divergences on a smaller, faster chart to recognize change that may be happening. Then we'll also talk about a large chart mid-band if, where's my laser pointer? Pew, pew. If the triggers are a full bar away. So I'm going to give you guys a quick little gift here. Here's your roadmap for you guys that want a picture of it. These are the areas that can be problematic. These are the areas where decisions are made, guys. When price reaches resistance, the buyers who are in control have to make a decision. Do they want to continue up or do they want to take profits? And at that same area, what you're going to find is there may be a group of sellers that want to enter a short trade, that want to fight those large trades. So this is where fights happen, guys. 1-to-1s, Fibonacci, divergence lows and highs. And these divergences will print from a pivot. You'll see it with a negative number. And what it means is that while the buyers were in control, the sellers stole their momentum. And you won't see that print until about the third bar down. While the sellers were in control, the buyers stole their momentum. You'll see that divergence low, but again, that you're not going to know until almost the third bar prints on that larger, slower chart. So we're going to use these areas in a simple recipe to determine whether or not we've reached an area that may stop the market, guys. And it begins with price reaching the area. In this case, it's Fibonacci support. And we allow price to reach the area because that's what sets off the decision-making process, right? You don't start making purchases at the mall until you actually get to the mall. The sellers don't actually make a decision until they reach Fibonacci support. And that blue Fibonacci support, the buyers aren't going to enter before they get to their number. So you're really recognizing where low and high may be in the market. And when price reaches Fibonacci support, check the trigger lines. If they're not below support, don't take any more trend trade short on that small chart. Don't take any more short trades into an area that may stop the market. So guys, it's a very simple recipe. If price reaches the area, in this case support, and the trigger lines remain above, no more short trades. Is everybody comfortable with that concept? And let's allow it to be very simple. Price reaches, no triggers, no trades. Sit on your hands and do nothing because it's easier to just not give the money away than it is to try to make it back. So when is the path clear? When do I have a straight shot to my target? When the small triggers and the large triggers get below the area. Notice that both small and large get below support. Support begins to behave as resistance. The area is clear. The path is clear. It has been broken. And notice how price pulls right back to resistance with odds favorable momentum. Notice that the most current bar didn't reach Fibonacci support. My path is clear. You guys are going to be able to pinpoint this tail. You're going to be able to use that look on a smaller, faster chart to enter the market short with both momentum and a clear path. And then you'll understand and learn to trust that momentum to get you to the next key Fibonacci area. So two options. Price reaches the area. If my triggers remain above support or below resistance, I'm not taking that short trade. Small and large break through the area. The area is now broken. Most cases, I'll look for a pullback to it on a smaller, faster chart to continue to the next area. And then finally, there's going to be one other one that I want to talk about, guys, and this is what we call a 50-50 look. Has nothing to do with chances of success. When 50% of your triggers, the small triggers, get 2 to 3 points beyond that fib, smash through that fib with odds favorable momentum, with strong triggers. And this is the key, guys. Strong triggers can break areas. When my small triggers are all the way down here and my large triggers are all the way up here, this area has the potential to break. All that strength can break areas. You may look for a short trade if the other two advantages are in place. If you still have momentum and if you still have the best of the best entry area, you can trade the potential for this area to break, and that'll be the second trade that we get. But I want to look at another slide, and I want to talk about 90% of your day, guys. The market is moving up. The trend is up. The direction is up. There's a line outside of the large triggers. There's even momentum to the upside, and then it hits Fibonacci resistance. When it does, each and every one of you in this class simply has to ask yourself, where are my trigger lines? If they're below the trigger line or below the fib, guys, just don't take that long trade. Say to yourself, this may reverse the market. This is an area that can create a bounce. This is an area where buyers and sellers may fight, and I'm not going to be a part of that fight. And thank goodness it keeps you out of a loser. And then the market pushes down and you start to see momentum and you get excited, and then it reaches Fibonacci support and it makes it to that mid band. I want you to take a close look at your trigger lines above them. Your large triggers have remained a full bar away. Your large triggers have room for an entire dynamic Renko bar to print. This is what we call the gap theory. And if price accelerates like it does here off that area and hits a fib, hits a mid band, and those large triggers remain a full bar away, price is likely to close that gap. It's likely to bounce back and get to those large triggers. And what it does, it doesn't tell you to take a long trade, not against triggers and trend. It says don't try that short trade because there's a termination condition below you. So I couldn't go long, and now I can't go short, and the market pulls all the way back up to resistance 2 times, to a divergence high. When price reaches that divergence high and trades above and back below, we call that a pivot stop out. Pivot stop outs are very powerful termination conditions, and they're even more powerful when they're at resistance. So I couldn't go long and I can't go short, and now I can't go long because look at my triggers, but look at how weak they are into that key area. This termination reverses the market, right? Large triggers go from green to red. Small triggers go from green to red. And there's separation between the two, which means that there's now momentum to the downside. If I look at the bottom of the bar, it hasn't reached Fibonacci support, and I'm below all my areas. Guys, I have a clear path, and there's that tail. There's all of you in this classroom pinpointing where the market is most likely to continue. Entering a short trade, you're selling high, and you're using that momentum to catch what is the highest probability trend trade that you can take. The trend trade that happens after a termination reverses the market with all of the rules met is the trade that typically wins 70 to 80% of the time. And guys, that's all we're talking about right now, is learning a little patience, understanding that every move isn't your move. But if you wait for the best, if you wait for the momentum, this one had the potential to clear, there's your tail, that becomes an opportunity. Weak triggers, right? Even with a clear path, the market pushes up. So we're going to wait for the absolute best, guys. And I want you to see this example where the sellers are pushing. And they're pushing so hard that they literally destroy Fibonacci support. Thank goodness nobody went long because all that momentum killed it. And then the sellers push down further. And they reach these yellow 1-to-1s. And every one of you in this class just simply says, hey, where are my trigger lines? And if they're above those 1-to-1s, this is your opportunity to not take a short loser. This is your opportunity to be patient, to see what kind of fight's going to happen. If the buyers are going to buy or if the sellers are going to keep pushing. And if you just accept the fact that you're not sure, you just don't know, it makes it easier to accept the fact that 90% of your day is chart reading. Because from the 1-to-1s, notice that they push all the way up and a little beyond resistance. So I can't go long into a termination condition. I can't go short because my triggers don't match. I don't have momentum or a clear path. And the market fights. Buyers and sellers absolutely duke it out for about the next, 45 minutes. Finally, the buyers steal the momentum from the sellers and they push all the trigger lines above resistance. They also create momentum, the smalls outside of the large. So with this momentum and a clear path, you guys that were so patient during the fight just got long at an area of support on a smaller, faster chart. And you took that trade all the way up to Fibonacci resistance because the momentum said that's where it was likely to go. Is everybody cool with this? We're just talking large chart lines right now. We're only talking about the lines on the large chart, the areas that may create a bounce and how to recognize if they're more likely. No triggers through creates an opportunity. Sometimes the market turns from nowhere. Guys, sometimes it has momentum and a clear path and it still turns from nowhere. I'm going to give you one more termination condition that uses that divergence. And what is divergence? It's a loss of momentum. For those of you that don't know, I was an English lit major. I firmly believe in the power of words. I really do. Whether you write them on the chart, whether you say them in your head, and three divergences in the same price range may terminate the trend. It lets me know that my advantage is gone. It lets me know that rule number 2 is no longer met, that I should no longer be looking for short trades if three divergences print. But you're going to see this on a smaller, faster chart. You're going to see this actually on your entry chart. We use lines on the large chart to determine where the market may reverse, right? We use these key areas on the large chart where the market may bounce, where fights may happen. We're going to use lines on the small chart for entries. So the only termination condition that I give any credit at all on a small chart is three divergences in the same location. Three divergences from a low, three divergences from a high may terminate the trend. It becomes more powerful when your small triggers work inside of the large triggers. Does everyone remember that anything can happen look? That weakened trigger state? Visually, you can see weakness in the triggers. Visually, you can see weakness through three divergences. Guys, this keeps you from trying that last short. It keeps you from throwing away your money at a market that may be reversing. You're going to see this look at a low or this look at a high times when the large chart can't give you that information fast enough. You're also going to use this look as a management tool. If that third divergence is higher than the previous, GTFO, guys, get out of that market. It's more likely to push up. Or that third divergence is lower than the previous, we're not staying in that long trade. We're getting out of that long trade, not taking that next long trade. You'll also see it with just two divergences. When you see those divergences against the trend and they're going up, the market's more likely to push. So that's going to be one of your management tools as you grow with the software. But termination conditions, guys, rule number 2 gives you a clear path. It gives you room to make money. Rule number 2 is the most broken rule from new users because we get so excited about taking trades. We get so excited about being in the market that we forget that it's better to trade with advantages. So far, guys, your large chart has been a workhorse. Your large chart has defined the direction of the market. Most current bar says the market's going up, right? The background is green. Does everybody recognize that? We're good with that concept? Once we have the direction established, it's imperative that we have momentum. The smalls need to be above the large, and those scissors have to be open. There has to be space between the two. This lets me know that the odds are favorable for the market to continue up. And then finally, we have to make sure that it hasn't reached areas. Resistance is all the way up here by the number 2. I have tons of room if I find a long trade. And I've also cleared resistance below me, which means that it's behaving as support. Kind of in the middle of nowhere, I've got room to run, guys. The large chart has done its job. I have both momentum and a clear path. So now I'm going to turn my attention to my smaller chart, my faster chart, my refinement chart. And rule number 3 says that I'm going to use a limit order, which means that I'm literally going to buy the market or sell the market and let the price come to me rather than chasing the price. I'm going to use that limit order at areas, fibs, midbands, yellow 1-to-1s. But here's the key, and I want you to use this language when you annotate charts. I'm going to use a limit order to buy or sell a pullback, that little retracement from the small crowd, at an area, fibs, midbands, yellow 1-to-1s, inside of triggers. And the tighter my triggers are, the better my look, guys. I've already got momentum. I've already got a clear path. let's refine. Let's use it and let's increase profit potential, decrease risk. So when everything is up on the large chart, 100% consistent trigger line momentum before an entry is taken, on the smaller chart, you're going to be able to buy low. Everybody's heard that, right? Buy low, sell high. You're going to be able to buy low by buying a pullback at an area inside of triggers. And you're going to be able to use that momentum from the large chart to take you to that predetermined exit. The same is true going the opposite direction. When everything is down, when everything is fast, when the path is clear, we're going to sell high at Fibonacci resistance on a smaller, faster chart. This is your pattern that's going to allow you to reduce risk, that's going to allow you to maximize your profit potential. And the two charts work together because inside of this one bar on the large chart, this is one bar to the downside, one bar with momentum, one bar, hopefully with a clear path. The small chart's going to have all these up bars on its way to high, right? And we're going to sell high. And ideally, these up bars take you straight to resistance inside of triggers, and we're going to use that to capitalize on the momentum and the direction and the clear path on the large chart. Room to targets is increased by selling high. So let's take a look at an entry, and it's about a 4-step process. And this is what it looks like. And you know what? I am also going to pull up my spreadsheet because we're going to talk about a couple entries. When everything is up on the large chart, and guys, this is the patterns that we want to take pictures of because it happens fast for the new user, but it slows down after about 20 or 30 pictures. On the small chart, we're going to wait for a reversal bar because we need a pullback to an area inside of triggers. So the reversal bar begins the pullback. And once this pullback prints, I want you guys to look for your triggers. I want you to look for the large triggers and the synthetic triggers. And the tighter these triggers are trending on top of each other, the smaller the space where we can fit an area. Areas are going to be fibs, mid bands, yellow 1-to-1s. So when the reversal bar prints, I'm going to look for the triggers. I'm going to look for the areas inside. I want you to always put inside in all caps. Your window of opportunity, the point where the market is most likely to continue, will extend from your highest point of support to your lowest point of support inside of what we call favorable large triggers. Favorable large triggers mean they're trending one on top of the other. The wider these triggers are from one another, the bigger this window gets, which means the more risk you're going to have on a trade. So pullback initiates with a reversal bar. I'm going to identify my triggers. I'm going to find the areas inside, and I'm going to activate a limit order right at the top of that window because the large chart is screaming to the upside. The large chart doesn't have anything to bounce off of. So the small chart, I don't expect it to get too far past it. This becomes your entry for the highest probability long trade that you can take. The same is true going down. The reversal bar initiates the pullback. I'm going to look in my trigger lines, this red box, but remember that my areas for entry have to be inside of favorable large triggers, which means that this midband represents the only point where the market is most likely to continue. I'm going to activate a limit order just below it, and I'm going to wait for that small crowd to give me a push. Hopefully they get me, and if they do, I'm in that short trade. Notice that 1-to-1s, fibs, they're all outside of the triggers, which means they are not in my window of opportunity. They are not where I expect the market to bounce. These trigger lines are moving averages. We expect price to return to the moving average. That's not enough to create a bounce, guys. We want to give price something to bounce off of, some sort of reaction point. Mid-bands, fibs, yellow 1-to-1s provide that reaction point. And then when you put the two charts together, momentum, everything says up. Look at how close price is to that divergence high. Look at how close price is to those yellow 1-to-1s. New users are always like, well, dag nabbit, Mark, I didn't have any room to make money. I know because I did this as a new user. And this is where I remind you why rule number 3 is such an important part of what we do. If you wait for the pullback to the areas inside of triggers, that $50 worth of potential profit turns into $250, guys. The entry window is down here at Fibonacci, inside of those favorable large triggers. So what we're doing is we're learning how to recognize this on the large chart so that we can take advantage of that on the small chart. One more picture just kind of showing the two. Everything says up. The momentum is the strongest. The triggers have cleared. Look at how it pulls back to what used to be resistance. Now it's support. And this tail on the large chart isn't what we're trading. It's that pullback to the areas inside of triggers. You guys are in at the mid band, and your entry area is defined by the areas inside of those triggers. Is everybody comfortable with this? And we're going to go through a couple of them. Let's do one real quick. Let's take a long trade together. What do you say? Everything starts on the large chart. If a termination condition reverses the market, this adds fuel to the fire, guys. Because decisions were made to reverse the market right at a key Fibonacci area. It provided odds favorable momentum, and since it hasn't reached resistance, the path is clear. Once I have this, I'm done. I'm done on the large chart, guys. It's time to refine it. We're going to figure out how to buy low. So I'm looking at my small chart, and I'm waiting for that reversal bar to print. I'm waiting for that one down bar after all of these up bars. And this says, hey, Mark, here comes the pullback. Here comes that little retracement. So once I see the reversal bar, I'm going to look from the top of my triggers to the bottom of my triggers because I know that this is where my areas have to be. This white box does not represent where the market is most likely to continue. This white box represents where I have to find areas to define where the market is most likely to continue. So I look for fibs, mid-bands, and yellow 1-to-1s. And my window of opportunity, we'll call it the woo for you Ric Flair fans. It extends from the highest point of support to the lowest point of support inside of favorable large triggers. And guys, this whole sequence is on the spreadsheet that I gave you. At this point, the only thing left for me to do is to activate a limit order right at the top, right at that highest point of support because of the momentum on the large chart, right? Because when my large chart looks like this, I don't expect the small crowd to get a huge push. So I'm going to get in right at that highest point. Now I'm going to wait, hope, wish, and pray that the small crowd gets there. There's just nothing else to do. Guys, that is your entry. This is the trade that I never miss. This is the trade that I refuse to miss because that's the trade that when the rules are met, let me get a new tab open here. When the rules are met, when I have the advantages, when I wait for the pullback, and I enter the market at the best of the best spot, guys, 70 to 80% of the time, this is my result. Profit target reach, getting to that absolute best of the best. So this is what we're focusing on right now, is learning how to recognize the best of the best. And then what this does for you, and here's the second half, entries are the most important thing. The best entry gives you a manageable trade. It does it in a couple ways. It starts because you enter with momentum up, because you enter with a clear path. That alone is a management technique. Waiting for the pullback allows you to define where the market is most likely to continue. And what that does for you is if you know where the market is likely to continue, well, then you also know where the market should not go if your rules are going to stay met. So for a short trade from the lowest point of resistance to the highest point of resistance, this is where the market's most likely to continue. I'm going to put a protective stop 4 or 5 ticks above the highest point of resistance for this short trade. Because if the market goes beyond these trigger lines, beyond these areas, I just don't want to be in it anymore. And the same thing is true here. I'm going to enter at the areas inside of favorable large triggers. My protective stop is going to be placed 4 to 5 ticks beyond. Guys, we're managing risk before we ever start taking profits. And then once I get a down bar in the direction of the trade, or once I get an up bar in the direction of the trade, I'm going to reduce my risk even more, about 2 ticks above the reversal bar down, about 2 ticks above the reversal bar up. And this is going to protect me, and this is going to allow me that if I do take a loss, and you will take losses, write it down on a piece of paper in front of you. I want to be very clear about this. Grant and Jen and Randy here, and who else do I have in here? You will take losses. Anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. But if you incorporate a very basic management plan, getting in at the absolute best of the best, what it does is it puts that stop 2 ticks below. And if the market pushes down, you've lost $30 or $40, not $300 or $400. It allows you to manage your risk. And this is such a key part of what we do. And guys, this is your high probability trend trade. This is your best of the best. This is taking the pullback to support inside of favorable large triggers. It's allowing you to capitalize. I'm going to put my template back on there so we can see areas. But all it's doing is it's giving you the opportunity to take a trade from the best spot. It's giving you the opportunity to be able to go back and study odds favorable momentum, right? Guys, look at this pullback directly to resistance inside of favorable large triggers. And then it did it again just for grins in case you missed the first one. What we're learning right now is how to pinpoint that entry so that we can make the most out of the momentum. And guys, that's all it is. If I circle tails on my large chart with all that momentum, what's it look like on the small chart? Looks like a pullback right to support, right at those triggers, and I'll be damned, the market goes up. And if I take that same look down here, not the best look, that one doesn't fit the rules. Those trigger lines are split and wide and ugly. And if I scroll back again, right to resistance, right at the 1-to-1s, right inside of those synthetic triggers. Notice how split these triggers are. Does everybody see that? The larger down here, the synthetic are up here. Guys, at the time of the pullback, my window can be huge when those triggers are apart. So the tighter they are on top of one another, excuse me, the tighter those triggers are, one on top of the other, giving you the best of the best look, the easier it becomes to catch those trades, the less amount of risk you're going to have on those trades. And that's all we're doing, guys. The high probability trend trade creates a foundation. It's a base. And I'm going to give you this disclaimer before I hand you a plan. The key to everything that we do with Nexgen, guys, and it's been true for the last 27 years. You have to have a foundation. I want you to focus on becoming a chart reader first. I want you to go back and take pictures of momentum and just label them. Smalls above the large, smalls below the large. The more pictures you take, the easier it becomes. You're going to understand the basics, and then each day and week into the future, guys, you're going to compound. You're going to build off of that platform just a little bit. So for you new users, I'm just going to read this word for word for you guys that aren't looking at the screen. I blanket with very conservative rules. The high probability trend trade is a very conservative trade. My goal for you as a brand new user is to recognize advantages and to give you a solid plan that optimizes your chances of success as you learn to read your indicators. So for all new users, all termination conditions are bad, right? No momentum is bad. Areas beyond the large triggers for entry are bad. And that's what I'm going to force you into believing. Not really force you, but I'm going to get you thinking this way as a brand new user. And what it does is it gets you thinking in terms of advantages. And we do this blanket because it does increase the likelihood of success. It pulls a lot of opinion out of the mix. But they're not always bad. But until you have the experience to know when to use the exceptions, it's just safer this way. The odds of you winning go up exponentially. So just like anything, the more time you spend with it, the more you'll see and the doors open for you. And I want to share this one too, guys, because you're going to see this today with a lot of trades. One of the biggest challenges is when the new users see older, more experienced users taking trades that don't fit the rules. And it's going to create confusion for you. Well, how come he traded into that line? How come he traded without the best momentum? And what you're going to find is that you don't have to do what they do because you're not where they are, right? I have traders in here that have been with me for years, that have been with me for 6 months, 8 months. And if you're brand new, I want you to give yourself just a skosh of grace and make it okay to be new. And you just don't have the reps yet to know when it's okay to break. And then you grow, and then you start recognizing patterns. And then what you find is that you're able to take these trades that you're seeing people take. So news is coming. Guys, we have high impact news. It's 9:58. I'm going to leave you with the S&P. I'm going to let you guys watch. Maybe there'll be a reaction. I'm going to take 5 minutes, and then when I come back, I'm going to introduce you to what I call the KISS plan. And the KISS plan is going to be your 100% cast in concrete recipe for success as a brand new user that's going to focus 100% on getting you to read your indicators. So I'm going to mute everything for a minute. I'll be back in 5 minutes. When I come back, we're going to resume trading. We're going to talk about the KISS plan. We're going to look for advantages, and then we're going to have a good time. So I'll see you guys in 5. If you have pictures, post them. If you have questions, ask them, please. All right, guys, we are back and getting at it. I guess news was kind of a dud, huh? That cheeseburger confidence didn't work, so that's okay. Before we get into looking at charts, though, I wanted to go ahead and give you guys the KISS plan. Guys, the KISS plan is the easiest way I know how to do this. The KISS plan is the 100% designed to optimize your chances of success with a high probability trend trade, with the 50-50 trade, that medium probability trade where areas have the potential to break. But here's the disclaimer, and I had to put this disclaimer in the room because people thought this is all I teach. People thought this is all there was to Nexgen. Guys, this is a stepping stone. This is the one that's going to teach you to read your charts. And the idea is that it optimizes your chances of success, because I say it all the time and I believe it wholeheartedly. Confidence comes from the memory of success, guys. The more it goes well for you, the more inclined you are to repeat that process. So this keeps you focused, but through simulation, through study, through class feedback, continuous practice, you will be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. Just a wordy way of saying, man, when you're a chart reader, you're going to be floored at what you're capable of seeing, recognizing, and taking advantage of. So this is going to be your simple plan for consistency if you choose to follow it. You are under no obligations to follow the KISS plan. You are 100% at liberty to do whatever you like to do. But that's kind of like when your parents go, all right, go touch that hot stove if you really want to. Guys, this is the one where I just wrap my loving arms around you and try to keep you safe. So your simple plan for consistency starts with, don't fight the large chart. It says direction, triggers, all that. How about this? Don't fight the large chart. Because the large chart are the people that are bigger and more powerful than you. The large chart are the people that create momentum, that establish the trend. The large chart are the people that react to the areas. So if you never fight them, if you always go with them, you're going to remove about 60% of the mistakes that new users typically make. And you're going to use your high probability trend trade, guys, and you're going to define your termination that reverses the market. That's what we call a strong bottom or a strong top, right? When the market reaches an area and creates a reversal, that's the best of the best. That's the precursor for the highest probability trend trade that you can take. That's the precursor for the highest probability trend trade that you can take, guys, is a strong top or bottom. But you don't have to have it. If you don't have it, you can still take a trade, but that's the one that gets you to 70, 80%. Do you have strong triggers on the large chart, no termination conditions on the small chart, and is there an area inside? Man, let's make that one even more prominent. Inside of triggers on the 5-1. If you do, if you have it, get in the market, guys. Don't second guess it. Don't think about it. You're on simulator. Don't even worry about whether it wins or loses. Just get into the market. All the advantages are there. This is the first step, guys. The first piece of the puzzle. The first bite of that ginormous elephant that is day trading is getting in at the correct spot. And then you're going to have to manage it. And I say this all the time, and I've got a t-shirt and a bumper sticker on the back of my car, and it says, great entries create manageable trades. The better you are at entering where the market is most likely to continue, the least amount of risk you're going to have on a trade. And the way your entry was very pragmatic, right? The way your entry was very methodical. It was 100% if then. If I have this, then I look for this, and if I have this, I look for this. If I have all of these, then I enter the market, period, right? So your management should be just as methodical as you learn to read your indicators. And then here's that magic phrase again. You will craft a plan tailored to your personal goals based on your experience reading the indicators. Your management plan will not always be this management plan, but guys, this is the management plan designed to give you the best results as you learn to read your indicator. And they all stem from getting into the market where it's most likely to continue, getting in at the pullback to the area inside of favorable large triggers, selling high, because if I know where the market is likely to continue, I know where it shouldn't go, right? Management, I'm protecting my investment. And that's where my initial stop goes. And if the market rails up through and hits that stop, guys, it's just a cost of doing business because I have momentum and I have a clear path and I took the best entry. And every now and then, someone with a lot of money is going to come take me out, and that's okay. Small losses are a normal part of a positive equity curve. It's very rare that I have 100% winning days. And I'm okay with that as long as I take the correct losses, the losses with advantages. Well, from here, there's nothing to do. You either get stopped out or the market gives you a reversal bar. And if it gives you a reversal bar, you're going to reduce your risk 2 ticks above that reversal bar. Let it be if-then. Try not to get wrapped up in the emotion of it. It's hard. Your palms are going to sweat and your heart's going to beat through your chest because you're so worried about everything going on. Just let it happen. That's what simulators for, guys. Enjoy the ride. This is my stop. My targets are predetermined. There's nothing for me to do. It's either going to hit my stop and I'm going to take this tiny little loss that doesn't faze me, normal part of the day, or it's going to hit my first target. And your first target is in the easiest to catch spot you'll ever get. With that much momentum and a clear path, it's hard to not hit $100. So when you do, you're going to exit your first contract. You're going to take that one off. That money is going to go into your account. Ninja Trader is going to tell you profit target reached. Your children are going to sing songs about you. Your wife's going to high five you, and your dog's going to quit chewing the sofa because, man, you feel great. You just made $100, and you did it with a rules-based entry. And then you're going to move your stop to break even. You're going to say, not only did I get paid, I got zero risk. I have zero risk on this trade. Nothing bad can happen to me. And that creates confidence. That reminds me 100% that the only reason I took this trade in the first place is because the large chart said, hey, we're going down with nothing in the way. Let's take that great entry. Here's a little heads up. That break-even stop's kind of ridiculous, guys. It's going to get hit a lot. You're going to have a lot of $100 break-even trades in the beginning. And then you will create a plan that maybe keeps it in place a little longer. But for the new user, let's go zero risk, money in the bank. And with all those advantages, more often than not, you should hit that second target, which is only $200 in the distance. And you're going to exit the trade, and you're not going to care what happens next. You're not going to worry if it keeps running. You're not going to care if it reverses. You're just going to wait for the next opportunity for your rules to be met. And this is the most basic form to management. If then, and it's all defined here. The pictures are in there. It's 100%. And this is the management for a high probability trend trade where everything is going well. And then you'll craft a plan tailored to your personal goals based on your experience. Eventually, that $300 trade with all that momentum and a clear path is going to turn into a $400, $500, $600, $700 trade because you're going to read your indicators. I have momentum and a clear path. I already took the best entry. I've already made money. Let's let that last one run. And guys, this is my goal for you, is to let it be easy initially, to let it be simple, to let it be focused. And then most importantly, to take everything that you do and present it in class and say, hey, Mark, here's my entry. Here are my advantages. This is why I did what I did. This is where I got in. This is where I got out. Can I do it better? Tell me what I'm doing, Mark. And that's exactly what I'll do. So I'm going to give you guys the KISS plan. I'm going to drop it in the room for you. We're going to go do a live market read real quick. And then we're going to start looking at the pictures that you guys presented. Are there any questions about a high probability trend trade? Are there any questions about momentum? If the background is green and the triggers are red, I can't have strong triggers to the upside. It's impossible. So for the brand new user, there's absolutely no trade there. For the experienced user, when you recognize that momentum is momentum, there might have been an opportunity to try and take advantage of that little pullback to resistance inside of favorable large triggers with the fast triggers down. The area never cleared. It rolled, and now it's going up with momentum. Rule number 2, let's see what it looked like. With odds favorable momentum, there was a pullback to resistance inside of favorable large triggers, but the path never cleared, and divergences killed the trade. But what did it look like here? And guys, all I'm doing is I'm showing you how to study. With all that momentum and a tail, right back to the resistance, right inside of a trigger. Notice that there's no triggers up here, or no lines up here. Those are my only lines. And that's where the market continued from. It's rarely an accident when that happens. And then crude oil, bless their hearts, they have been grinding up. Area breaks, resistance behaves as support. Area breaks, resistance behaves as support. And that big trending market just continues up. May not have been a new user advantage there. May not have been a trade for you guys that are brand new. But as you grow with the software, you're going to find opportunities outside of these high probability trend trades. So I'm going to scroll up to the top of the classroom, and I'm going to start talking about what you guys see. I'm going to look at the pictures that you posted. And man, there really haven't been any. Which means that I've got to find stuff to talk about, guys. I'd always appreciate a little help with that if there's things that you want to discuss. Arturo, that was your test. All right, JW. Let's see what we have. JW says, I've got a good top, which means that a termination condition created a full reversal. He also said that he had odds favorable momentum and the triggers were below, therefore the path was clear. He takes his first entry, closed out really quick, made a couple hundred, right? Just want to get in and out for quick profit. And then you took the second entry awful low, JW. And then that divergence and those small triggers on the wrong side of the large killed it, but you still got in 76.25, 76.75. So you made $25 on 4 contracts. That's a $100 trade. And then that is, it's about $200 worth of movement. Welcome to Apex. It's scary, isn't it? But I'm glad that you posted this, and I like it. You're going with direction, path, everything both times. But you're absolutely terrified. I can see it. You're absolutely terrified because now it's live. And that's okay. That's a pretty normal part of it. So how do you get rid of the jitters, guys? How do you get rid of that pucker, right? We're going to have to send a steam cleaner over to JW's office and get the pleat out of his seat. The more times you see the perfect trade, the more times you see the advantages, you see the entries, you see the opportunities, the easier it becomes to trust them. So JW, you're great on simulator, and now it's time to go live. And because now you're live, don't lose sight that the process yields results. Don't lose sight that the advantages are why we take these trades, right? You're in at the correct spot. Your stop had to go where the market shouldn't, above the highest point of resistance. Even if from there, you could have taken your $100. If you waited for the pullback to the higher point, you could have easily made, let's see, in at 79.25. You could have easily made your money a little easier, right? So waiting for the best entries, managing appropriately. And I don't disagree with jump and ship, but you're in so stinking late that it just doesn't create a manageable trade. Does that make sense? Great entries create manageable trades, guys. I'm going to trademark that one. It's my Ricky Bobby phrase. Good top, odds favorable, clear path. There is your first entry. Getting paid at 76. I like it. Nicely done. And then your second entry, trying to take advantage, and the rules are met, and it doesn't work, and you take a small loss. I think it's perfect, Adriana. I'm not sure that you could. Is this Haji or Adriana? That's Haji, sorry. Haji, it's perfect, right? Everything about it, great stop placement, except you're in at 78 and out at 76. So you were able to take 400 down to there. I love it. Perfect stop placement where the market shouldn't go. From 76 to 78, that's 2 points. That's $100, right? 4 times over, $400, and you lose a couple on the last, and you're like, no, but that's the right trade. You get in and you take a small loss. I think it's a perfect trade, guys. It's perfect execution. They can't all win. And that was right before news, so the market was probably a little emotional. But it's a great job, Haji and JW. Great job. And then Miss Adriana, let me see. Good trade, bad entry, re-entered and won. Went to look for the synthetic band. So, Adriana, I like the idea. It's a termination. It creates the reversal. I'm going to give you one lesson to make sure that you never take that loser again. Hopefully you're still in here. Large chart mid-band if the large triggers are a full bar away. So what happened, Miss Adriana, is you got caught in the gap theory. And I noticed that you don't have a reversal bar marker on your large chart. And that would have helped you an awful lot here. But see how you reach the mid-band? And the large triggers are still way off in the distance? This is that little patience piece. And notice that none of your areas are inside of triggers. You're well below them. And I'm not sure why, but you should have a 1675. Hold on, 1675. You should have a fib right here as well. Your synthetics don't seem to be printing on your large chart. So will you do me a favor? Thanks, Joel. You're right. Will you right-click on your large chart for me, Adriana, and just double-check something for me. Go Data Series and make sure that your tick replay is checked. I had this problem yesterday. I really did. And I had trouble getting my fibs to pull over. And I eventually had to download historical. But making sure tick replay is on will help. And what it'll do is it'll take your 5-1 chart fib and it'll drop it onto your large chart fib. And then what that would have done for you is I'll show you exactly where that fib would have been. And I think that it would have bought you a lot of patience. So it's 1675. If you had a Fibonacci line right there, Adriana, it would have changed your thought, wouldn't it? None of the triggers through. Large triggers, big bounce. It just would have kept you patient a little bit. And guys, that's why we run, and I'm going to show you the picture. You should have a couple different fibs. Yeah. I've watched you trade. You're good at this. But that would have been great information. So when you guys look at your charts, there should be 3 time frames worth of fibs. There should be a large time frame, there should be a small time frame, and then there should be the time frame that it is. No, I love that you do. And yours was such an easy fix, Adriana. The good ones are good, and the bad ones are lessons, right? So guys, if your fib runs all the way into oblivion, that's native to whatever chart you're looking at, whether it's a 13.2, 5.1, 34.5. If it's a skinny little fib that kind of stops 1 bar short of the edge, that's from your small time frame. And if it's a fat fib that stops 1 bar from the edge, that's from a time frame that's 1 bigger than your large chart. So we use these 3 areas on the large chart. We have them superimposed and synthetically there because this gives you the absolute best view. The absolute best view of what's going on. So if Miss Adriana had pulled the fib over from here, and we'll double check and make sure why, she would have recognized the termination condition. She would have been able to avoid that one, or at least been a little patient while it bounced to get the most out of it. I think it's a great read, though. It's a termination. So Adriana, did you right-click on your chart? Right-click, data series, and make sure that tick replay is there? That's the first thing to do. So try that one. Is it checked? And just a little admission, guys. I am not much of a tech guy, but I've made a lot of mistakes, so I know some of the easy fixes. Okay, so you're there. So you have going on what I had yesterday. So Adriana, do this for me. Are you comfortable building a chart? Let's walk through it real quick because I think this is what I had to do. So from your control panel, go New and Chart. And it's going to bring up this box right here where we can build a chart. And you're trading the NASDAQ, so we're going to go NASDAQ 324. And that's where it's going to give me the options. So I have to put a template in it. Are you with me so far? I don't want to go too fast. And guys, this is just great for everybody. Cool. So under template, I'm going to do the Nexgen Futures 34.5 Renko bar. And then I have to change these numbers. I have to change it to 34 and 5 because that's the size of the chart. And I want to make sure that it says Nexgen Dynamic Renko here. And then I'm going to click Tick Replay. And then when I click OK, in a perfect world, it creates a chart. Mine's off screen. And I just want to double check and see if all of my fibs are coming in the way they should. So mine's calculating right now. Body size is 34 and then 5. So new chart, NASDAQ. Body size is 34. New bar is 5. Let me drop the picture in for you. And make sure you get the template in there as well, the 34.5. And then what happens is that chart comes up and you can see that I have native fibs. I also have a synthetic fib down here. Oops. Hold on, let me look at what you got. Looks perfect. Yours looks perfect. And then you can see that I have the fat ones from the higher time frame. I've got the ones that extend all the way from the native time frame. And then somewhere there's probably a skinny one from the 5-1. Whoops. And I think I just killed my NinjaTrader by doing that with the chart. Hopefully. Yep, there we go. I killed it. Oops. So now I'm going to reload real quick. And then guys, this is one of the things that the classroom is for. It's not just chart reading. It's not just It's not just feedback. Like if you have a technical problem, I'll do my best to fix it. If you have a problem or a question about writing a plan, I'll help you write your plan. If you have a question on management, I'll help you with your management. This class becomes absolutely amazing the more you guys throw at me with it, the more you guys ask about what we're doing. And then Joel, gap theory, right? Hit the mid band, and the large triggers are all the way up at the reversal bar marker, and this is a perfect example. I think so, Mike. I like it checked on both. Awesome gap theory picture, guys. So this would be one of those pictures where I would take the screencast link and I would go to my termination conditions and I would just create that hyperlink and I would type in gap theory because it gives me something to study, to come back and study, right? To come back and go, oh, wait a minute. When is the midband a termination condition? When the large triggers are a full bar away. So you're creating this recognition simply through repetition. There's your S&P. The triggers don't line up, guys. It's just ugly. It's still calculating. And I shouldn't have messed with it while it's calculating. But when the triggers don't agree, when things don't look the same, the advantage kind of goes away there a little bit. So that's kind of where we're at right now, is we're making sure right now that we're always speaking in terms of advantages, that we're always talking about what's good on the chart. We're always talking about being able to recognize, momentum, and being able to recognize a clear path, and being able to recognize an entry area. And then when it's all there, just pull the trigger, guys. Get into that trade. Take that trade. Embrace that trade. Be willing to lose that trade. If you've ever read The Art of War from Sun Tzu, he says you have to put yourself in the kill zone to be successful in battle. And trading is no different, guys. You've got to be willing to lose trades, and then you're going to start winning more trades. And now I've got to go to my Mark Douglas thing. When you stop expecting to win every trade, and guys, the psychology of trading is huge. It's easy to recognize the patterns. It is more difficult to do nothing when there's nothing to do. But Mark Douglas, the late Mark Douglas, said, when you stop expecting to win every trade, you'll find that you start winning most of your trades, right? Because when you don't expect to win every trade, then you don't get that emotional response from the losers, guys. The pain you feel from losers is self-imposed. That's because you believe that you should have won. And the reality is you never get that assurance in the market. You never do. And that's why you trade patterns that provide a statistical advantage. So when you stop caring about the result, and that should be easy on sim. If you're scared to win on a simulator or scared to lose on a simulator, you're going to be absolutely petrified with real money. So focus on the execution of the method, guys. It's the execution of the method that yields results. It's not your desire for money. And when you believe you know what's going to happen, you set yourself up for failure when you take a loss. And when you don't care what happens, the trade doesn't matter. It's a collection of 20 or 25 trades that you track, not one trade at a time. All there are is up and down ticks, guys. The only thing in the market is up and down. That's it. We're just trying to capitalize on the ups and the downs. And there's that gap theory that Joel pointed out. And sure enough, it closed right back to it. So there's what just happened. And here is Joel being a fortune teller. And for those of you that are brand new, for my Grants and my Jens and my Randir, I hope I'm saying that correctly. Feel free to correct me. What you're doing is you're starting to recognize patterns. Absolutely, we'll walk through it, Jen. Joel said with the market all the way down here at 78.12, he's not going to go short because it might go up to those triggers. Either Joel shook the magic 8 ball, or this is just a pattern that he recognizes over and over. And Joel, doesn't it feel good when you don't go short here because you know that's likely to happen? It's pretty cool. Nice read. All right, Miss Jen. Day 1 and being brave. I love it. So let's see what you did. Other than just test my eyes. Holy smokes. So what you have just taken advantage of, Jen, is what we call a momentum trade. I sure do. So watch this. There's your large chart. This is me cheating a little bit. I hope you don't mind. Here's your small chart. And then what I can do is make life a little easier for all parties involved. And we can talk about what you did. So I always start on the large chart. And I want you to see, and this is pretty cool. Most importantly, at the top of the move, Jen, no, I want you to be wrong. You're actually, you're spot on brilliant, but you may have stumbled into it. What this is a momentum trade. This is not a high probability trend trade, but I want you to see what you did and how smart it is. You saw the red background, and just tell me if I'm reading it the way I think that you read it. You saw the red background and you thought, okay, I'm only going short because Mark clearly is brilliant, and even though I haven't seen him, he's probably a handsome fellow, so I'm going to trade with the trend. And then you said that my small triggers are below the large triggers, which means momentum. Rule number 1, you're brilliant. You caught that on day 1. And you said, I know I need to have a pullback. I know that I need some sort of pullback to an area, right? And you did. You pulled right back to those 1-to-1s, and you had momentum everywhere, and you took it all the way down to Fibonacci support where you got paid. Does that sound about right? Correct. So what you have taken, my dear, is what we call a momentum trade. It's not a high probability trend trade. Awesome. Oh, then this is great. And this is one of my favorite trades. It really is. So the high probability trend trade, would have to come from areas up here, areas inside of triggers. But when the market turns, and especially when you see that divergence and weak triggers, this is always my first target. Mid-bands, stuff like that. So what you did is with the market cranking down, notice that the smalls are outside of the large, odds favorable momentum, odds favorable momentum. When the small triggers break this 1-to-1, I will literally sit with a limit order right at that 1-to-1 to catch the move because of the momentum, because of the good top, because of everything going on there. And I'll see if I can find an example. And this is the exact same concept, where that termination and all that momentum, small triggers break, pulls back, let's make money on the way up. And this is one of my absolute favorite trades. And you'll see that I take this one more often than not. I love momentum style trades, and on the NASDAQ, they're amazing and they're easy to catch. It just takes a little practice, but your execution is beautiful on that one. And maybe this is a European thing, but I don't need to see 17 days worth of data, especially on the NASDAQ that has so much. This is really enough to get me where I need to be. And this is really enough. Maybe a little bit bigger to look for divergences. A lot of rear view mirror on there. But Jen, you absolutely nailed 100% a momentum style trade. So I'm going to do this because you're brand new. And I think that it's time to start adding these trades to the spreadsheet for you guys. So Miss Jen, you get the first momentum trade in my spreadsheet because the execution is 100% flawless. And then Cav says nice work, and that's Cav's trade. Cav is absolutely amazing at that trade. The pink dots are where sellers were showing some action in that move. So Rand, here, what you've done here is you have put a market flow chart over a dynamic Renko bar chart, and you're getting this little conflict of interest in there. Pink bars represent the seller action within. I'm confusing you, Cav? I'm so confused now myself. Oh, the dots, yeah. The short answer is we don't worry about the dots. They don't need the dots, but I still want to give you the answer. The answer is the green dots represent concentration of buyers. The pink dots represent concentration of sellers. And honestly, right here, it's a whole bunch of noise that you just don't need. It's an awful lot of noise that isn't necessary for you to be successful. You're welcome to keep them on there. I know that there's other people that put them on there and use them. I can't think of any way that this would ever outweigh momentum and a clear path. And for me, I think it's just a lot of noise on a chart. But if you need them, by all means, use them. I hope that was helpful. And then because I do like to give fish and teach you to fish, if you go to the market flow volume analysis, there's a couple great videos and some explanations of what they are and how they work. But honestly, that market flow setup, it's just a momentum chart. It's the ability to capitalize on a little bit of a momentum and emotion. And let me know if you need a little more clarity. Adriana says that the momentum is up and the triggers are above and there was a little pullback, and you get in with the small triggers up at flat large triggers, but it does correspond. Let me see where we're at. The path is clear. It's already closed back towards the synthetics once. 92 was support that held. Everything is up, and you just wait for the small triggers to roll to take advantage of it. And the first target was filled. So 3 at 10 is $600, I believe. Am I doing my math right? And then you had to manage the second target. Not a strong bottom. But how many divergences were there on the smaller, faster chart? Did we get an idea off of that? Do you notice how it never cleared though, Cindy? Let me open up my NASDAQ. And this is going to take us into some cool chart reading lessons. Show me a picture, Joel, so I know what you're talking about. There's white bars all over the place. Ron doesn't use a market flow chart, so the only white line he would have on his is a reversal bar marker. Adriana, beautiful trade. And then did these move stop loss to the magenta dots? Okay. So the 1-to-1 stopped it. Yeah, I'll use these as profit targets all the time on a smaller, faster chart with the NASDAQ. They tend to create a bounce. And when they create a bounce with divergence, they tend to create a big bounce. So it looks like that market went up to, what, 03-ish? Nope, you're up 07. It made it up to 20. Oh, it looks like it did make it up to 20. 1975. Just not sure how much nonsense was in the middle of it. My NASDAQ chart's opening right now. I didn't have it open. So I love it though. Momentum for the win. Momentum for the win. And I guess for you new users, that's what I really want you to recognize, is that it's amazing what you can accomplish with momentum. All right, and then we're coming through. Am I done calculating? Not yet. As soon as that's done calculating, I may have just killed it. As soon as that chart's done calculating, yeah, I just killed my NinjaTrader. Guys, if your charts are calculating, don't mess with them. There's a bug in Ninja that doesn't enjoy that at all. So I'm going to fresh data real quick, and I'm going to get you guys that NASDAQ chart up so that we can take a look at it. And Miss Cindy, we are going to look at whether or not, what the divergence situation was on the smaller, faster chart when that large chart didn't quite make it through. I just need a second. But did you notice that it didn't clear though? The large chart, large triggers never made it through that area, right? You might have taken one short on a 50-50, and then by the time price gets up, it takes them a second to roll. So we'll see what it looks like. My charts are coming up right now. And then Cav, pivot, stop out, full reversal, odds favorable into a termination condition. But still momentum for the win, right? It pulls right back to everything, and you're able to get out at the trouble spot. And guys, this is one of those things where new users want to go, but Cav traded into a termination condition, right? Not a 50-50, Cav. I mean, you're bouncing right off a fib, brother. You are 100% into a term, but you're into a termination. No such thing in my world. But this is where chart reading pays dividends. And let's go through the whole chart read. That's a termination that created a reversal, guys, and we call this a good top. And let me talk about what that means. When I have a good top, the areas below are more likely to break with odds favorable momentum. And guys, this is a great lesson. When I have a termination that creates the reversal, these areas are more likely to break because decisions were made at a key area to reverse that market and produce momentum. Let's go to the next one. I want you guys to look at the momentum on the small chart and the large chart. And what do we recognize? With odds favorable momentum, both small and large, it's hard to stop that charging bull. There's so much momentum to the downside that it's amazing. And then guys, just one more little piece here. With such a low risk entry, Cav says he has more advantages than disadvantages, and he's willing to risk his money. Oh, Joel, take care. Cav, does that about sum it up? Because you're coming from a good top, this is more likely to break. Because when there's that much momentum on both charts, it's hard to stop it. And because you could get such a low risk entry at that beautiful spot, it makes it easy to manage and get cash. And guys, this is a chart read. This is where each and every one of you are gonna just, you're gonna end up here. And Cav, can I let you in on a secret? You already can. The only difference is that you have to analyze in the moment, and I analyze on a chart that isn't moving. So, but I want to backtrack a little bit to 10:05. You'll get there. But the way I analyze your charts, ladies and gentlemen, is exactly how I want you analyzing your charts. And I want you to start talking to yourself about all the advantages. So, Cindy, this is not a good bottom, right? So let's do the analysis as well. This is all we're going to do, guys. We're going to chart read all day long. And it's going to be fun. So we're going to backtrack a little bit to Adriana's trading. I'm trying to set up as well. So where is the market coming from? And for this one, we kind of have to backtrack a little bit. And Adriana, I don't know if you saw this one or not. So this is a bad top. Price never reached a key area. When the reversal happened. So the fibs below are more likely to hold. Does that make sense? Everybody, we're not coming from a key area. We're not coming from a fib, a mid-band, a yellow 1-1, nothing. It's just, man, the sellers just said, hey, guess what, buyers? Papa. Which means that these are less likely to break. And they didn't, right? The large triggers came through. The momentum is there. And this is one of those 50-50 trades, one of those trades that has the potential to break because of momentum. But there's a checklist for it in the KISS plan. And the checklist says that it should come from a good top or bottom, from an area that creates a decision. The checklist also says that divergence can absolutely kill it. So what happens is we end up with this 50-50 trade. And let me pull it up for you guys. That's not it. We end up with this 50-50 trade. And I want to go through the checklist for you guys. And I think that it's pretty awesome that we can do this. And I'm going to put the checklist here on the actual picture. And I'll put it right up top. And I hope you guys can see that. And you new users, this is exactly what I gave you when I gave you the KISS plan. I gave you this approach to being able to trade. So let's just go through it. We had odds favorable momentum, absolutely. The smalls were outside of the large on the small chart, absolutely. And then it says no divergence on the 5-1, guys. So this was your first big red flag for going short. Why? Because I don't have a clear path, which means that divergence is literally forfeiting another advantage. And here's your little slide rule. I already don't have a clear path, so I only have 66% of my advantages. Now divergence takes away momentum because divergence is a loss of momentum. This is the Y's on 50-50s. This could kill the trade. But once again, the same thing that we saw in Cavs trade, right? This much momentum, it's hard to stop a charging bull. And it does push back down. If you took the best entry, it does push back down. 2 divergences is even worse for a 50-50 trade. And then it's not coming from a good top or bottom. So on this 50-50 trade, you're literally 50-50 on advantages. Does that make sense, everybody? And this is how you can analyze your own charts afterwards, is you can use these checklists, these checklists that were given to you. And you can say, wow, I gave away half of my advantages. If you took the short, it didn't work. So the other half of Miss Adriana's trade is when the area doesn't break, when the market tells you it's unlikely to happen, and you end up with this momentum, it's likely to run. And she just did that. She just took advantage. The area didn't break. The market rolled. She took her advantage to go the long side, and it was pretty effortless, it would appear. There's crude oil stuck in a range. And then it gets to the divergence high. The large triggers still haven't broken. 2 divergences against it. Where did you enter? I can look and see around 10:07. I think you got in somewhere. I'm not sure where you got in. And it did come off of an HVA line. I don't remember what your entry price was, though. At 02, there was a signal, but it wasn't really a rules met signal. You're on the wrong side of everything, but I'm having trouble picking up where the bounces were. So that was your 94, and that was your continuation. It's hard to tell after the fact. But if you want help with that market flow chart, you can always drop it in the picture as well if you want, and we'll look at what it's telling you. But that was kind of the dissection. When the bad top over here created an area that couldn't break, it made this one more likely to run. And then weak triggers with divergence, sure enough, the market pushes down. Right at that divergence high. And what does your small chart say? 1 divergence, second lower divergence. And then Jen, that's kind of your momentum trade right off the mid band. But those large triggers are a full bar away. The picture with 3 charts is too short. You don't like it? Do you have them all on one screen, Adriana, or are they on multiple screens? One thing I can do is if I hit capture, if I go to my next screen, I can pull my market flow chart on there, and it kind of drops down one. If you have OCD like me, you can use your selection tool and pop it up. And it makes it a little easier. All right, does everybody recognize this is your gap theory? Let's get rid of all this other stuff and let's turn picture taking into a lesson. Whoa, that's how you invert a picture. Cool. If price reaches a mid-band and the large triggers are above the reversal bar marker, no short trades into that area, guys. This mid-band is behaving as a termination. That's the gap theory, which means that it's more likely to close the gap up to the synthetics than it is to go down off of the mid-band. Does that make sense? That's an awesome lesson, guys. That's the one that doesn't get you going long unless you're Ron. It gets you going short. Gonna ease out, don't want to miss a tee time. Are you playing golf today, Ron? Do you actually play golf? I assume that you didn't. I set up a tee time for 120 today. My brother completely fixed my swing. I just have to go practice it. So hopefully it's all good news tomorrow. But guys, there's your gap theory. And when it's from a bad top, it's even more likely to work. David, I am playing at Oak Hollow in McKinney, Texas. Man, Jay, that's the first time I ever did it, brother. Let's try it again. What I did is I had to have the section first. So that is kind of floating. And I grabbed the side of it. And I just did it like that. That's kind of cool. So I think, and you know I've always been wondering this, if I take the selection tool and you want to see how, is it going to work? Oh, that's not going to work, huh? I was trying to do this yesterday with Paul to show that areas at resistance look just like areas at support. It's the same look, right? Now you can trade backwards. No, not on live charts, Jay. Why would you want to do that on a live chart? That'd be tough. No, only with the captured pictures. Haji, great restraint. 50-50. Almost entered at the mid band, but 50-50 stayed out when divergence printed. Then the second divergence printed, and absolutely would have taken your money. Haji, what you have just illustrated is how rules can protect you from yourself. It looks like a good trade, doesn't it? But it's a 50-50. And divergence on a 50-50, guys, that's a killer. That's bad news. Nice trading. I want to show you guys my morning with rules. So this morning on the NASDAQ, I'm waiting for an entry. I'm waiting for a pullback. And then Miss Jen, there's that momentum style trade that we talk about with all that momentum. I was getting coffee. I missed it, but I circled it anyway because it's the same great look. And then when it finally pulls back, it didn't get to my mid band. And guys, I don't chase price. I firmly believe it's either my money or it's not. And my money comes from a mid band. And this is a NASDAQ trade. My small triggers were away. My large chart said go, but it just didn't get to my entry. And I had to sit there and go, oh man, I guess I'm just not going to get paid on this one. And then it starts coming back right off of those small triggers. And I'm saying to myself, all right, maybe I'm going to get another shot. Maybe it's going to give me a trade. I kind of hope that it does, but I still needed it from the area inside the triggers. I'm not going to chase it up here because then my risk is just, it's too much. And as it starts to come down, for NASDAQ traders, and all of you that are trading NASDAQ, these small triggers can absolutely destroy you and ruin your day. So I'm telling myself, I need a trade on the correct side if I'm going to attempt this long. And then by the time it gets on the correct side, my fib update comes in, and I'm not going to trade directly into a fib, and I stay out of the trade. And guys, all of this happened in 30 minutes. I had to keep reanalyzing. Okay, my rules are met. My rules weren't met. They're not met yet. Oh, I know what I'm looking for. Dag nabbit, they're still not met. And guys, this market absolutely dropped after that. It absolutely dropped. And my rules kept me from trying to take a trade 2 or 3 times. My rules kept me from entering that market on a hunch. Boy, they sure came close, but not quite. And if you scroll back to that 7 o'clock, that was it. That's what the market did. And you will. And the easiest way to do it, Jen, and I'm going to tell you right now, I sound like a broken record. The easiest way to learn your rules, the easiest way to get good at them is twofold. The first thing is, let me find it. Is print this out and put it on your desktop, right? Take just the checklists and print them out and put them on Here's a checklist. That's not it. Here we go. Here's a trend trade checklist. So here's the first part. Is every time you take a trade, police yourself, right? Go through and look at it. But the most important thing that this does is, let's do this real quick. Dun, dun, dun. Let's go find one that fits the rules, that looks great, that's easy and zero worries. And I want to say it was one back here around 953. I'm going to give you the second version of what makes life easy when it's time to learn indicators. And I'm just looking for a textbook version. All right. So what you can do is, if you took this trade, the easiest thing to do is to draw an arrow. Oh, awesome, Tony. It should be a good one today. I think I've got everything in line for it. Jen, don't just say I went long. I want you to write out strong triggers, right? Because that's what it says for rule number 1. And I want you to add momentum. And here's the cool thing is, whether it's a trend trade or not, strong triggers will always be momentum, 100%. And then I want you to, and we have to use our imagination a little bit. I'm going to cover those fibs. And then you need to put no terminations, or no termination condition. What does that mean to me? That means that I have a clear path. So what you're doing is you're taking the words and you're associating them with the look. And I totally fudged on that one. I'm hiding the fib. And then this is probably the easiest thing, because it reminds you, pull back to an area inside of triggers. That's the high probability trend trade. If you're looking for momentum, you would put pull back to an area, right? That's all it is a pullback. Small triggers have broken area on the small chart. So you're writing your entry rules. You're writing your conditions for being there. And then what happens is, just kind of by default, you end up able to catch this trade. Just by default, if you go back and you write strong triggers enough on a chart, you know exactly what they look like. If you write a termination condition enough on a chart, you know exactly what it looks like. And then if you start recognizing that pattern where the market tries to pull back to those synthetics, it keeps you patient. And it's just pretty amazing at how everything comes together and how easy it can be if you allow it to be simple. So, and then of course, the most important thing, do you have your capture software? I know you said you were doing a different one. Do you have this one? It should have been downloaded on your computer. Okay. And then we can be consistent, and then it's totally up to you. If you like bells and whistles, the Snagit software is cool, and it gives you a lot more editing options. But even more importantly is, you can take your rules checklist and drop it right on your chart, so that you can go back and you can police yourself a little bit. And you can say, well, did I have odds favorable momentum? Did I have this? And I think it's 63 American US dollars for the Snagit. I live off of pictures. You can't see it in this one because I upgraded my computer about 4 weeks ago, but I'm already up to 375 pictures in about 4 weeks. I typically take, I don't know, 3,000 to 5,000 pictures a year. And I annotate them and I talk about them and I really commit them, everything that I'm looking at, to memory. So there's your termination condition, right? Divergence. One divergence pushes you to an entry. All that momentum takes it back to support. And now we're in a holding pattern. We're waiting to see if it's going to hold or break. And since we're not coming from the best top ever, this is more likely to hold. And that's just a chart read, and I hope that makes sense to everybody. So I'll leave you on the NASDAQ because the NASDAQ sure does like to move a lot. And I'm going to take 5 minutes. I'm going to go stretch my legs because I'm getting old. So if you have a question, please post it in the room. If there's something that I can do for you, something you're working on, let me know. And then I'll be back in about 5 minutes, and we will go full-blown rock star on the last hour. So back in a minute, guys. All right, ladies and gentlemen, let's get into that final hour. Cav, got us going? You learned today, Jen. Nice. Not the best top. Great. So clear path, strong triggers. And then Cav, you took the first one. And then on the way down, you take the second one and take it to the fib. Nicely done, Cav. Gap theory maybe gives you a little patience on this one with the synthetic all the way up there. And then what I do is when I'm waiting for that gap theory, the closer I get, that's where I start looking for that close on the correct side. Makes it a little easier. Oh, very nice. Nicely done. And great trade, knowing where the market's likely to go, right? Outstanding. And then there's that ugly 50-50 with the divergence. That sure does look like multiple divergences in the same price range. So we're waiting to see if it's going to hold and roll or if it's going to head up. Don't have the momentum on the small chart, can't take a momentum trade. Don't have the momentum on the large chart, can't take a momentum trade. Just got to wait a minute and see what happens, guys. This is the hardest part about what we do, is doing absolutely nothing when there is nothing to do. Read a book. I play Scrabble online. I play video poker. I'll draw. I draw a lot. So I'll have a sketchbook on my desktop or my iPad and just kind of wait it out. And that's the hardest thing, right? So, oh, awesome. Flying to Dubai? Say hi to Rand here for us. That sounds great. It was great having you, Jen. I look forward to seeing a lot of you. Have a safe travel. And look at that. It never turned. It never rolled. Never gave you an opportunity to go long. And you're being just a little patient. Now you've got weaker triggers. The path is clear. Kind of fun. So guys, what do you want to talk about? This is the part of Classroom where I try to shut up, but I'm not good at it. So Grant, if there's something that you want to discuss, let me know. Anybody in the room, right? You see the perfect entry and you stay paralyzed? You start overthinking it, don't you, Cindy? You're like, that looks perfect. And then, hold it, tell me if I'm right. You see the perfect entry and your brain says, what if it loses? And you don't take it. Has anyone else done that? So Cindy, and we're going to go through it, right? All day. So guys, that's a trust issue. Everybody's gone through it. And Cindy, I don't know what kind of trades you're taking, but let's use the high probability. Oh, awesome. No worries. Grant, what's cool is it doesn't even matter that it's futures. It's patterns. It's just patterns that have been proven to create a statistical advantage. These same patterns work on Tesla. They work on any stocks. I've had people use options. And it's just patterns. So it killed me when I started with this, Grant, because my brother said, okay, we're going to sell. And my brain couldn't comprehend how I could possibly sell something that I didn't already own. And that was my biggest stumbling point in futures, is I would never go short because it didn't make sense. And it was funny, I skipped them forever. And then eventually you get to the point to you realize that it really doesn't matter if you understand futures. It doesn't matter if you understand anything about the news released for the futures. If you just find that pattern and develop the trust, then you can be successful. And that's what we're going to talk about right now. So this particular trade. Oh, okay. And see, Grant, you could teach me about options and Forex. I know absolutely nothing. So it's just something new. It's taking a new class in college. All right, Cindy, we're going to fix your brain. Are you ready? Cindy, can you show me, and you don't have to, could you show me 10 pictures of the trade that you consider the perfect trade? Like, do you have them stored? Could you look at them? It doesn't matter. I don't have to see them for real. But I want to know, did you take them? Like, if you took a picture of your spreadsheet, would it look like this or would it look like this? And this is going to be a drawn out process a little bit, but what you're gonna understand where I'm going with it. Because I want you to see something. If I take, why not? This is why you're scared, my dear. Why would you not use the sheet? You can't open them? That's okay. Can we fix it? You want to fix it? Do you have Microsoft Excel? Okay. So let's do this. I want you to go, follow with me, okay? I want you to go on your computer and I want you to type in actually, you know what? Let's just do this. Type in 90-day. Okay, maybe the computer's too big for it. I don't have the same. I want to get you to the right place for it. All right. My computer doesn't have it because it's a new computer. So we're going to do this. I'm going to give you mine real quick. And we're going to get that thing on your computer. So I want you to do this. 101, Nexgen tracking. All right. So there is mine. And I'm going to bring up the room, and hopefully this doesn't give anyone a seizure with all that. So I want you to click the download button. And then once you click the download button, it's going to pull it up in your downloads. So now it's officially downloaded. Let me know when you have that. And I'm going to go to my downloads. So this PC downloads. And let me know if you're with me. And if you're not, we'll get you there. Okay, hold on. See, you're getting ahead of me. That's okay. So I want you to open it up. Does it say enable editing? Because typically when you download, you have to enable editing to be able to do anything with it. And we're going to get there because that's what we do. And what we're going to do, okay, so it's not letting you download it at all. So let's do this. Go to your settings and go to apps, default apps. It'll bring it up. Do you know how to do that from the little window thing? go to the cog that says settings. And then from settings, you want to go to apps. And let me know when you get with me there. Okay. And then I want you to click on default apps. And what this is going to do is this is going to make your computer look for Microsoft Excel anytime there's an Excel version. So you're going to have to go down to choose default apps by file type. And let me know when you click on it, and I'll click on mine. I'm such a firm believer in the power of having the spreadsheet. I want to make sure that you don't miss out on this. So we'll let mine load real quick. All right, so we're going to go to Excel. That's going to be an E, right? C, D, E, X. Don't need exec. We need... Maybe it comes in Microsoft Excel. Let me double check. Microsoft Access. We're going to find this. Microsoft Edge. Son of a gun. It won't let you download it at all? Gosh, I need a tech guy here. I'm trying. I've never had to go through this. XLSX, says Jim H. Okay, you have someone? Yeah, or get in touch with Jason. I'm so sorry. Jim, thank you. I'm trying to see if it lets me save. No, I do worry because I want you to be where you're at, because that was kind of the whole beginning of where I was going. So if I go File, Save As, and Browse, I want to see something. Excel Workbook, does it give you the drop-down menu? No, don't ever be sorry. This is what we do. So when you go to save it, does it give you the drop-down menu here to pick? Excel Workbook? There's a lot of different files here. So when I go save as Excel Workbook, and here's all the different ones as well. Does it give you these options? And then Cindy, I got to tell you, this is only as Notepad. That is weird. Man. All right. I'm not a quitter. Third-party add-ins. I don't think we have that. You should have permissions. I'll tell you what, if you don't find someone, I feel like Jason would be able to get you where you need to be. And this is such an important part. Have you used Jason before? I just want to make sure. There's the link to tech. I know he did a lot of work with Microsoft years and years and years ago, so he's probably a pro at it. Yeah, he could probably get you taken care of 100% really, really fast. Cool. So let me go to the other side of where I was going with this. How do you avoid getting jumpy? How do you avoid second guessing? And Cindy, you guess it. It's just going back and seeing the same thing over and over and over again. And one of the things that I encourage everybody to do every morning is study the pictures from yesterday. So Cindy, if you took 10 pictures yesterday, you should go back and look at them, right? And if they're all high probability trend trades and you know it 100%, then this is a trade that you know through history wins 70 to 80% of the time, right? So it gives you a statistical advantage. And then you have to trust it enough. You have to see it enough. And most people, that takes 100 pictures, 300 repetitions, whatever, that you so believe in this recipe of momentum, a clear path, and an entry area that every time it sets up, you absolutely refuse to miss it. You absolutely refuse to not take that trade because you believe in the statistical advantage, whether it's a momentum trade, whether it's a high probability trend trade. And that takes a while. And I know that you haven't been with me that long. So the more pictures that you take, and let me open my spreadsheet back up because I want to show you some things. And guys, everyone thinks I'm crazy for doing this, but I'm going to do it. Let me open up my spreadsheet. I've got a couple here. Perfect high probability trend trade short. Didn't work, right? Why is this in my spreadsheet? This is in my spreadsheet because this is odds favorable momentum and a clear path and a pullback to resistance inside of the favorable large triggers. And guys, it just didn't work. But I'm so focused on these three advantages that I'll take this one every time. And it doesn't faze me to take a loser because I know anything that loses or anything that wins 70% of the time loses 30% of the time. So if I can go through and I can go through my checklist, Cindy, if I can go through and make sure that my rules were met, then I'll take this trade every time and I won't hesitate. And it takes a while to get to that point. It takes a while to no longer be nervous. You just have to keep seeing it. And you can't base it on one. You've got to base it on that sample over and over and over again. And take a ton of pictures because the more pictures that you take, the more inclined you are to find the trades, to get the trades. And I know that this works because my brother and I swap pictures all day long. Even when I'm teaching class, I can't get him to not send me pictures of momentum for the win. And he knows I'm not going to respond to it. So go through that. And I guess the biggest thing to say is don't feel like you shouldn't be nervous in the first 30 days. Don't feel like you shouldn't be nervous in the first, 90 days. But be so sure of what it is that you're looking for and be so convinced that it does win more than it loses that you never miss it. And that's really the key to being very comfortable. Is really just seeing the same darn thing over and over and over, hearing the same thing over and over, writing the same thing over and over. And it's like a broken record, but the broken record gives results. So, man, that was a long talk to say, look at the pictures over and over. But that's what we do every day, right? We just talk about patterns every day. Mark Douglas, one of the psychology guys, in one of his lectures I was watching, he talks about you're so welcome. If you were betting $100 on a coin flip, would you choose heads or tails? And most people would say it doesn't matter because there's no advantage one or the other. And I want to make sure that makes sense to everybody. If you're betting $100 on a coin flip, you don't have an advantage with one side or the other. And then if you weight the head size, if you put like a little piece of wax or something then that coin flip is more likely to land on heads. Is everybody with me so far? So with no adjustment, with no statistical advantage, it just doesn't matter what you do. It's a crapshoot. Who knows? But if there's a statistical advantage, if you weight one side of that coin, if that coin suddenly becomes more likely to land on heads than tails, doesn't it make sense to bet your $100 on heads every flip, knowing that you're likely to win more than you lose? Guys, that's what we do here, is we show you which side of the coin is weighted so that you know which way to place your bet. So the advantage of momentum, the advantage of a clear path, the advantage of an entry area, what you do is every time that coin flip happens, is that's what you're betting on. And Cindy, that's exactly what we're doing, is we're betting on a pattern. Steve, man, I don't understand. Okay. It's a physics lesson, I guess. You would bet on the side that creates the advantage? English lit major, man. I can't read your spreadsheets either. But thank you for putting that in the room, because you got to know where the advantage is. If it spins, it's likely to fall on the head. Okay. Cool. Again, English lit major. I don't know anything about it. Thank you for that, though. But I think the point is still intact, though, right? Is you'll bet on the one with an advantage. You'll bet on the one that's most likely. And that's all it is, guys. That's a matter of trust. So, Steve went and physicsed me. So even though the momentum looks good, 3 divergences descending, the long trade loses its advantage. Because it's into a red fib, the long trade loses its advantage. Oh, I only have 2 open. So that's kind of what we're looking at, guys, is identifying the advantages and then building up the trust, right? Trust takes a while. Trust doesn't happen overnight. Trust comes through repetition. Cindy, you want to know another easy way that has nothing to do with spreadsheets? And this is for everybody, not just Cindy. Market replay. And this is a pretty underused tool as well. What market replay does for you is you can go back and replay today like it was brand new. And then it gives you have a lot on your Snagit. Cool. I like it. But market replay gives you a pause button. And this is the best part. It gives you a fast forward button when your large chart rules aren't met. And then it gives you a pause button. So Cindy, what you can do is you can have your entry rules in front of you and hit pause. So the market will literally stop. And you can make sure that you're taking that trade with an advantage. And what market replay with a checklist does for you is it allows you to go through to play it back and to see the potential of following your rules. And that helps establish an awful lot of trust in rules and well. And guys, I say it a lot. I'll stand behind 100%. I feel like this is the best software out there. Even my brother will tell you, if you find something better, send him a link, he'll buy it. And the only thing that Nexgen can't give you is repetitions. The only thing that Nexgen can't provide is experience, guys. But what we can do is provide an awful lot of hand-holding as you go through it. And that's it. And that's kind of the magic of what we do, is the ability to take everything that you see and everything that you take and everything that you wonder and give you feedback. So it goes back to this one right here that I post all the time, and I'm just going to post it again because, once again, recognition through repetition. So to minimize your learning curve, post pictures of trades in class, and you're also developing trust. Every trade, win, lose, or draw, and if you win and the rules are wrong, it's a short-term victory but long-term failure typically. How are you going to know the difference? You're not expected to, not as a brand new user. You need feedback. And the only way I can provide feedback is if you ask for it, right? So if something goes wrong, ask for feedback, because there's always the chance that nothing went wrong, that it was just a cost of doing business. Hey, no problem, Grant. I hope you have a good one, and hopefully I'll see you in here tomorrow. One of the most common things that I see from newer users is they take this short, right? And it doesn't work. And they take what they think is the most outstanding short in the world. And then it doesn't work. And what they do is they beat themselves up. Oh, I screwed it up. It's not right. It's no good. I can't believe it. And I can't even figure out what the hell I messed up. And if you post this trade in the room, guys, this is exactly how it came to be. Is they were all bent out of shape for losing this trade. So we went through the high probability trend trade checklist. We went through the expectations for it. And we're just allowing the market to be wrong. And that's one of the other things that posting in the room does for you. Is when something doesn't work out, you know that you at least took the loser with the highest chance of winning. And everybody's going to lose, guys. It just happens. You have to know what you did right or wrong so that you can learn how to not repeat the mistake. And that's it. So Cindy, that was 20 minutes of flapping my gums to tell you that you're just building trust, but it will come through time. It really will. Man, termination. Look at that. Didn't break and bounced. Weak triggers and bounced. Termination and bounce. Terminations and bounce. Oh, there's no doubt in my mind. I think most of the traders that I work with are a lot like I am. If I learn something new, I want to be good at it yesterday, right? I'm going to go play golf today, and it's going to aggravate the hell out of me that I don't shoot 72. And I'll be lucky to shoot mid-90s. But I want to be good at it yesterday. And it's that drive and that determination, I think, that really sets us up, that makes us better, being able to go after it, to not settle for just being average. And then everything works out and you get to where you want to be. So, guys, we got about 15 minutes. What do you want to talk about? The NASDAQ is giving us zero opportunity right now. I don't have momentum, nor do I have a clear path. What I'm witnessing right now is the market caught between areas. Crude oil has momentum to the upside. And then CAV, because of these three divergences, what I really want to see is my small triggers to get above it, my large triggers to get above it. The same idea on broken areas, right? When the small and large get above an area, it's broken. 36 isn't broken yet, nor is my third divergence. So what I'm really waiting for, guys, is I need this market to give me something above that divergence high. I need my triggers to get above it, or that area is not broken. Does that make sense? It's the same idea for large chart terminations when using these small chart divergences. Until my small and large get above it, that divergence is still in play. Once my small and large get above it, it's a reset, guys. Those three divergences are no longer a factor. The large chart says up. The large chart has momentum. The large chart's even coming from a termination condition. But I can see on a smaller, faster chart the fight that's happening right at the fib that isn't broken. Do you guys see that? When I talk about decisions being made at key areas, guys, this is why I hate not having rule number 2 in place. Look at all of the sideways, the divergences, the pivot stop outs, all the challenges that happen right at the key area. I don't know. I don't want to be in that fight. Notice how your triggers never got out of the synthetics though? That's a pretty good sign that they still kind of want the up. The small triggers are coming up with strength. That's a good sign. There's momentum. But am I willing to trade against 3 divergences? My rules say it's a termination condition. Even my market flow has flat, lifeless triggers. It is. It's a little chaotic, Roku. And the wonderful thing is that we don't have to be in it. And if the market does go up, my next fib isn't until 78.88, right? I've got a lot of room if they decide to run to that next key area. There's a pretty good chance I'll be able to find some entry in there, unless they just straight line it. But do you guys think it's an accident? And if I tighten it a little bit, is it an accident that there was such a huge fight between buyers and sellers right at key areas? I don't think it is. I think when the triggers eked through 36, that midband was more likely to hold. And I think when the large triggers didn't follow, price was more likely to close the gap. And when those large triggers rolled above this area, well, shit. All of this makes sense, doesn't it? Not the best top, directly to the midband. Everything rolls. So now we're just saying to ourselves, do I take a shot? And for me, that third divergence, my rules say I can't, not yet. So let's see what happens. This is kind of fun, right? I know what I need to see. I need to see the small triggers get above there, at least to give me a shot, to make me feel comfortable with it, to make me have that, yeah, I might. If you were looking for the continuation style, this is it right here. When the small triggers roll up and pull back to the mid-band right at them, I just don't. Looks like this look have reversed more than it has gone up. It's just 3 divergences. My rules say don't trade into it. I mean, it's textbook termination, right? And this is where that little devil on your shoulder, Cav, is going, but Cav, dude, look at those triggers. But Cav, it's green. But Cav, you know you want it. Just take it, man. Just take that trade. What could go wrong, brother? And that little angel on your shoulder in that high-pitched voice is like, but Cav, there's 3 divergences. Let them break. That's the fight all of us have. If I were betting money, I would bet up because that's what the large chart says. But I don't have a clear path on the large or small. So the safe money, the physics lesson, is that if the coin is spinning and the weight's on heads, man, Steve, I'm going to see it spinning in my head from now on. Clearly, I've never weighted a coin. So we'll see what happens, guys. We'll come back to it. Because if you just stare at it, you're going to convince yourself to do something. There's a pivot stop out at support. Absolutely no triggers broke. And notice how weak the triggers are? Guys, this is the look that has the potential to reverse the market. This is the look that has the potential to start things on the way up. But now I just got to wait for rules to be met. A lot of fibs on that chart. Not my money. Not my money. The old adage, walk into the bank and demand all the money, you're a bank robber. Walk in the bank, ask for your money. Sorry about that, Haji. Let me get that up. It's not coming up for me. Hold on just one second. Haji, would you mind reposting it? My whole Discord has just hemorrhaged on your picture. Here we go. Thank you for that. Let me open it up. All right, I'm going to do a little rebump on Discord real quick. Hold on just one second, guys. Hopefully this doesn't boot you. I don't believe it will. All right, can you guys hear me? Sometimes Discord is a pain. Okay, cool. So let me get my screen back up. I learned how to fix this one a while back. There we go. So Haji, let's take a look at what you have here. Boom, like a champ. So Haji, you had a good bottom. You had a 50-50. You had one divergence. You took a beautiful entry. And you knew that there was problems. And you got out. 78.49. Beautiful. That's 6 contracts. $110 each, Haji. Am I reading that right? 6 contracts, $110 each. All right, so Haji, where's the other $625? Oh, he saw it. Did we see those losers that got you so low? And you don't have to post them, man. You're never obligated to post them. But you know this one's kick-ass, right? We did talk about them? Awesome. That's the most important thing to me. Isn't whether you win or lose, guys. It's whether or not you're able to capitalize, right? So you showed this one where you didn't enter. And then we saw this one that was definitely a loser that everybody took because it was the right trade. So you made money there. And then that was it for the day. I don't know. I could be mistaken. It was before that. No worries. And then Cav, you're saying that 3 divergences held? And Haji, it's no big deal. But I do always look for that stuff. And Cav, the commissions don't kill you if you trade that many contracts. The commissions only kill you if you lose on that many contracts. What is it, 14 bucks a round turn? Right? I try to trade less. I'm all for a 6 slot. If I have a $300,000 account, if I don't have a $300,000 account, then a 6 slot is just over leveraged, and that creates problems. So I still couldn't break it yet. It doesn't mean that the market's going down, but it means that rules kept you from losing that long. It's pretty awesome. And Haji, by the way, I love your first entry on that. Good bottom, odds favorable, 50-50. I think you absolutely rock start it on the first entry. I don't know if I said that. You have an Apex 250? Right on. One thing, Haji, and man, you can do whatever you want to do, right? But if you can't qualify a $50,000 account on a 2 lot, what makes you think you're going to do it on a $300,000 account, right? Or a $250,000 account with a 6 lot? Just, I'm throwing that out there. I've watched people do this so often. If you can't do it, because the $50,000 account has the best risk to reward, it has the best drawdown, goals. Somebody way smarter than me did the analysis on it. In a 2 lot, the average user on a 2 lot, you should be able to qualify it in 6 days at $250 a contract. That's it. And your losses are smaller, and you guys do whatever you want to do. No, I get it. Then buy 20 of the 50s. Of course, the best bets just don't lose, right? Get it funded and do the same thing every day that wins more than it loses and laugh all the way to the bank. That's the goal. That's the goal. I want you guys winning. I love that there's options to re-up. My goal is that you guys don't ever have to re-up. And then assuming all the lawyers sign the paperwork, when Nexgen has their funding company in 3 months, that's going to be the goal as well, is to create successful traders. I want all of you guys making money for me. It'll be fun. You sure do, Cav. Everyone, you still have to go through the process. Look at that. Remember I said this is the look that typically makes the market go up? Sure enough did. Weak triggers at fibs. Guys, that's it. That's about all I've got today. Awesome day. Lots of great